Hello and welcome to another update video about Natgas. As we're heading into the weekend, the market didn't really do much more, and I maintain my update, or I maintain my analysis that I posted yesterday and the day before. So the wave count here on the 4-hour chart is not, it's not being challenged. It doesn't need to change. The idea is that still here, obviously, it's unchanged, that around the 13th of December, a larger degree third wave formed a low that was here on the Natgas futures chart at around $2.18. Then a wave 4 to the upside, which can be counted as a 5-wave move, but it is quite messy structure. So it turned out to be a 3-wave move with a high likelihood at least as a wave 4. And now we're coming down in a wave 5. That's at least my understanding right now of the chart. That can change, that's why we are tracking the structures, the pivots, because we need to know, okay, when is this idea invalidated? I'm going to talk about that in a minute, because we are going to add some key levels here, even though I think they are okay as they are, but I still want to make sure that we figure out what the key levels are really that keep the trend down, basically. Local trend, okay, is down at the moment. So the idea is still that after this wave 4 top, we could have started this wave 5 to the downside. Should take us ideally into the region between $1.98 and $1.81. So looking at the structure, best I can tell, and I go to the 1-hour chart for that. We have a wave 1 here, we have a wave 2 there, and this is another 1-2 setup. That's one interpretation, 1-2, 1-2. And then the third wave bottomed on Tuesday. The smaller degree fourth wave reversed basically in this short trade area or resistance area. But we only see 3 waves down at the moment, okay? But ideally this is pushing a little lower, and we complete wave 5 of 3, ideally at around $2.01. Then we should see another wave 4 and a wave 5. So that's sort of still the idea of the ideal roadmap here. In this scenario, my best interpretation is that the $2.36 resistance area or resistance level is still relevant. So as long as we don't see a break above $2.36, I maintain this perspective. We have obviously seen a little bit of upside today, and we only see 3 waves down. So could something else be going on? Well, I mean, an alternative perspective might be that this wave 5 to the downside, which is unfolding and which started up there at around the 9th of January, that this wave 5 is an ending diagonal. So as an ending diagonal, we have a slightly different structure here. Not much different though, and I will highlight it in yellow. We could still say that this was a wave 1, this was a wave 2, but then we have an A, B, C down in wave 3. This here is now a wave 4, and then we get a wave 5. It's just a slightly different structure. Let me change the wave degree. It's worth knowing that in a diagonal pattern, the subwaves are corrective. Wave 1 isn't very clear, but the wave 3 would be an ABC. And then it's worth knowing that a wave 4 in a diagonal can be quite aggressive. So in this scenario, I can add an alternative resistance area, which stretches to $2.41. So actually that needs to be the working resistance area, because what we don't want to do is say, okay, if it breaks above $2.36, something different is going on. Well, it is. At least it indicates that we are not in an impulse down, but we could be in a diagonal. So I want to keep the door open for lower prices as long as the $2.41, $2.42 level is holding. Because in the yellow count, to give you an idea of the microstructure, and I say that because we only have 3 waves down, it is possible that from this circle wave 3, which might have bottomed here on Tuesday, the move up into resistance was only wave A of 4. We've seen a 3-wave move down in wave B. We haven't even taken the previous low out. And then this is a C-wave rally right now. Now, which one it is difficult to say right now. I would say as long as we stay below the last swing high at $2.23, and as long as we stay below the trend line, which is essentially the same thing. I'm looking for the white detailed count, micro count, to play out, and we could get one more low here to around about $2. However, if we get a break above the trend line, maybe on Monday it gaps up or something, then it's likely the C wave higher, and then this area becomes relevant between $2.35 and $2.41. Even though, I mean, we don't need to go that high necessarily, right? It's only resistance. It could even find a reaction at around $2.28. What I will do, I take these these resistances on the left-hand side out because they are not relevant anymore. I would rather focus on the one we've just defined. And once we have that wave 4 in place, then we can calculate a target for the wave 5 to the downside. However, a break above $2.42, yeah, that would indicate that something more bullish is going on. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, please check out our stocks and S&P 500 service that you'll find linked in the description. Thanks a lot for watching. Bye-bye.